Ladies and gentlemen, good day and welcome to Q4 FY23 earnings conference call of Oriental Carbon and Chemicals Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Akshat Goenka, Joint Managing Director of OCCL Limited. Thank you, and over to you, Mr. Goenka.
Good afternoon and a very warm welcome to everyone. Along with me, I have Mr. Anurag Jain, CFO, and SGA, our Investor Relations Advisors. We have uploaded our results and investor presentation for the quarter and year ended 31st March 2023 on the stock exchanges and company website. Hope each one of you had a chance to go through the same. I would like to start with a big thank you to all our shareholders for blessing the demerger with near unanimous support. We are very grateful for the same. Despite a challenging year, our revenues grew by 18% to rupees 467 crores with EBITDA at rupees 98 crores, a growth of 14%, and PAT of rupees 44 crores, which is a growth of 9%. For the quarter, revenues stood at 104 crores, whereas EBITDA grew by 42% to rupees 25 crores, and PAT more than doubled to 12 crores. This is mainly due to correction in raw material prices and improved efficiencies. The Board of Directors have declared a final dividend of rupees 7 per equity share of face value of rupees 10 each of the company. Total dividend for FY23 stood at rupees 14 per equity share. The automotive industry witnessed a remarkable upswing in 22-23 attributed to a surge in economic activity and mobility. Sales of automobiles experienced substantial growth with most automakers ramping up their supplies. In April 2023, all segments including passenger vehicles, two-wheelers and three-wheelers displayed growth, highlighting the industry's successful transition to BS6 Phase 2 emission norms. According to the data published by SIAM in FY23, passenger vehicle sales increased by 27% year-on-year, commercial vehicle sales increased by 34% year-on-year, and two-wheeler sales increased by 17%. The demand outlook for commercial vehicles continues to remain robust. The increased economic activities and a resurgence in infrastructure and construction projects have been driving truck sales across various segments. The industry has witnessed improved fleet utilization and anticipation of higher replacement demand. These factors have contributed to the overall growth in volumes within the commercial vehicle sector. India has been witnessing an unprecedented economic growth, and infrastructure construction is at the heart of this wave. A strong pipeline of upcoming and ongoing projects and large programs are underway across sectors, presenting parallel and never-seen-before opportunity. The boost in infrastructure activities is further boosting the demand for our products. The Indian tyre industry is currently experiencing favorable conditions, benefiting from a combination of robust demand and moderating raw material prices. It is anticipated that the domestic tyre industry will witness double-digit growth in the upcoming fiscal year. Furthermore, exports of tyres from India are expected to increase by 15% in the ongoing fiscal year, indicating positive prospects for the industry. Many tyre makers are planning to accelerate exports by entering in the PCR and truck and bus radial segment. The content of insoluble sulfur is about 1.7 times over bias tyres and radial, where it improves vehicle fuel efficiency, mileage, and lightness. This should further boost the demand for our company. With this, I'd like to hand over the line to Mr. Anurag Jain to update you on the financial performance of the company. Thank you.
Thank you, Akshat. I will take you on to the standalone financials of the company. Total income for Q4 FY23 stood at rupees 103.7 crores as compared to rupees 111 crores in Q4 FY22 and stood at rupees 467.5 crores in FY23, a year-on-year growth of 18%. EBITDA for Q4 FY23 stood at rupees 25 crores as compared to rupees 17.6 crores in Q4 FY22, a growth of 42%, and EBITDA for FY23 stood at rupees 98.3 crores as compared to rupees 86 crores in FY22, a growth of 14%. EBITDA margin is 24.1 for Q4 FY23 and 21% for FY23. Profit after tax for Q4 FY23 stood at rupees 11.5 crores as compared to rupees 4.3 crores in Q4 FY22 and stood at rupees 43.7 crores in FY23 as compared to 39.9 crores in FY22, a growth of 9% year-on-year. PAT margins stood at 11.1% for Q4 FY23 and 9.4% for FY23. With this, I would like to open the floor for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may enter star and 1 to ask a question. The first question is from the line of Samarth Singh from TPF Capital. Please go ahead.
Yeah, good afternoon. Thanks for the opportunity. Am I audible?
Yes, sir.
Good afternoon.
Could you, we've seen a decent bounce back in demand from in terms of vehicle sales in Europe, and at the same time, there's been a sort of decline in sales in China, and I think Shikoku mentioned that in their results as well, that they're trying to shift supply out of China into other regions. So if you could just talk about how both of the dynamics are playing out here for the industry and for OCCL in particular.
So, yeah, you are right. There is an increase in demand for vehicles in India, not necessarily globally. As far as China is concerned, there has been a decrease in demand, which is now picking up, but still, if you look at it from the level of the peak demand, it is lower. It is also coupled with the fact that there has been additions in capacities in China, which means they have surplus material and they would like to ship that out of China.
So are we seeing pricing, as a result, are we seeing pricing pressure in our regions of, in the regions that we supply to?
So prices are seeing a downward trend for 2 reasons. One, of course, is because the raw material prices have started now normalizing. So therefore, the price increase that we witnessed in the last year, when I say last year, I mean the financial year and Q1 of this year, where it was maintained, they have now started coming down to align with the lower raw material prices. But further, yes, there is a pressure from China in the Asian countries.
And could you give me the freight cost as a percentage of sales for the quarter and for the full year, and the same for fuel and power costs as well?
So I cannot give you for fuel and power, but as far as freight cost is concerned, it would be, just give me a moment. It will be about 12%, 12.5%.
12.5% for the year and for the quarter?
For the year, it will be around that. But this also included a period where the freight costs were remarkably higher because of the global issues.
For this quarter that just ended, what would be the freight cost?
So normally it should be around Normally it should be, just give me a moment.
It used to be around 6 to 7% of houses.
Normally it should be around 6 to 7%.
Okay. And what was this for the year? What was the split between revenue split between export and domestic?
Well, that figure we do not have and we do not share. But our market share in the total domestic demand was around 55%.
Sorry, the market share for domestic market share was 55%.
Yeah.
Okay, but I mean, in the annual report, you share your exports and your domestic sales, right?
Yes. I'm sorry, we do. I misunderstood your question. I don't have that figure readily available with me. I will come back to you with that later.
Fine. And just on our debt, could you give me a breakup of working capital versus term loan and what we expect the net debt to be for?
Sorry, I didn't get your question. Can you
repeat the split between working capital and term loan and the total debt?
So my total debt was So my long-term borrowing was about 104 crores, and my working capital was around 55 crores, and the total borrowing was 159 crores.
And we expect by September the long term to come down to 80 crores. If that's, am I right about that? Or I think also.
Yes, you understood correct. That by 30th September we are expecting the long term to come down to around 80 crores.
Got it. And my last question, I think sometime a couple of years ago you had given us a demand for insoluble sulfur per region. Would you have an updated numbers for that? Between North America, Europe, India.
No, we do not. We do not have the latest report with us. Though we have our own ideas, but we would rather wait for the report to come and then share it with you. Maybe.
What is just the domestic demand? What is that as of today?
The domestic demand should be around 25,000 tons.
25. Okay. And it's still domestically, it's still a two-player market, right?
Sorry.
Domestically, it's still a two-player market.
Yes, I can't hear you clearly.
The domestic Indian market, is it still are there essentially two suppliers of insoluble sulfur into the market, or?
It's no longer a two-player market.
It's no longer a two-player. Oh, great. That's all.
Thank you. Ladies and gentlemen.
Sorry, there was a question about the split in domestic and export. So, in total, about 51% of the revenue was from export. But if we talk about only insoluble sulfur, then about 58% from exports.
Thank you.
Listen, yeah.
A reminder to all the participants, you may enter star and one to ask a question. The next question is from the line of Gunit Singh from CCIPL. Please go ahead.
Hi, sir. Thank you for giving me this opportunity. So I have a couple of questions. What are the volumes for Q4 and FY23, and how do they compare to the same period last year?
So volumes numbers we do not share. So sorry, I cannot give you those numbers. As far as comparison with last year is concerned, it was lower. Sales volume was lower.
Okay, so volumes in FY23 are higher.
No, the volume in FY23 are in the same range as FY22.
Okay, and for Q4, are they higher as compared to Q4 FY22?
Yeah, they are lower for FY23 than FY22.
Okay, they are lower for FY23. And for Q4?
For the year,
No, the year they are the same.
That's what he said.
No, I thought for the year. First you asked for the year. I said for the year they are the same. For Q4 they are lower.
All right. And can you give us an idea about the realizations currently?
No, it's very difficult because the current realizations are still settling down, so it's very difficult. Of course, they have come down. That is for sure. Basically because of reduction in raw material prices and other things. So realizations have come down. But to give you an exact, this thing is difficult.
Can you give me a broad range, realizations currently as compared to, say, the same period last year or quarter on quarter?
Lower.
And going forward, do we expect the realizations to stabilize, or do we see them going down? What is the trend currently?
See, realizations would be a factor of many things. It is a factor of the exchange rate. It is a factor of the raw material pricing. It's a factor of competition, right? So what we more constructively look at are the margins.
Correct. So, what kind of margins do we see in FY24? Do we see the current margins to be the bottom? And, or do we see some growth?
Our endeavor will be to be in the same ballpark of margins that we are this year.
All right. So, we should expect about 20% margins in FY24 as well.
No, when we say margins, we mean margins over variable cost and not the EBITDA margins.
We will have one advantage this year, and that is the freight rates being lower. So that could add as a buffer.
All right. So in terms of EBITDA margins, what kind of margins can we expect in FY24? Do we expect improvement?
If the volumes go up, then obviously with the variable margins remaining same, the EBITDA margin should improve.
All right.
Yeah.
All right, sir. That's all from my side. Thank you.
Thank you. We have a follow-up question from Samar Singh from TPF Capital. Please go ahead.
Yeah, thanks for the follow-up. I just want a clarification.
I just want to add to your earlier question when you asked about two-player market or more. The balanced players that have come in have majorly taken a market share from import. Our market share has only come down a little bit. Their main impact they have had is on the pricing.
Got you. I appreciate that. And I just wanted to confirm this number. So, total sales in the chemicals business was 465 crores for the year, and you said 58% of that was exports. Is that right?
No, when I said 58%, that was for insoluble sulfur, not for the chemical business. Right?
Okay. You're of course you have the sulfuric acid business.
Yes.
Got it. So I'm just trying to reconcile these numbers. So for last year, our domestic sales were about 220 crores and about 160 crores of exports. And this year we have done exports of. Could you just give me the export number out of the 465? I'm just trying to see the difference in.
Can you repeat the last year's number, please? Can you repeat the last year's number?
Domestic was 223 crores of sales and exports is 163 crores. For a total of 386 crores of top line.
That is why I'm a little perplexed. Because my numbers are 181.7 crores from domestic and 196.4 crores from exports in total, totaling to a revenue of 378.14 crores last year.
Okay, I thought your standalone had a total revenue of 386. Okay, got it.
Yeah, total revenue on standalone is 378.14 crores.
Got it. Okay, fine. And for this year, you just give me those numbers for this year as well.
Sorry?
Could you give me the same numbers for this year as well?
This year, So this year my domestic sale would be 225 crores, including sulfuric acid, and export sales will be 232 crores, 231.8 crores to be exact, and 224.99 crores for domestic.
Okay, excellent. Thank you. And actually, one question on, I guess, the post-demerger residual investment business. Have you, is there any more clarity that you can provide minority shareholders on what your plan there is? And a follow-up to that would also be, I think you would have an investment in Duncan Engineering as well. So, like you've done this very fair demerger of the chemicals business, would there be a sort of demerger of the engineering business as well sometime in the future?
I just want to reiterate your two questions. First question is, what is the investment business going to be up to? And second question, I didn't understand. Something to do with Duncan you asked me.
I think the investment business would also have, a 50% stake in Duncan. I'm not Duncan Engineering. And would there be at some point, not in the immediate future, but at some point, would there be a demerger of that as well, where minority shareholders might become direct shareholders of Duncan?
No, I don't think right now there is any discussion or debate on what we are going to do in the future with Duncan. But I would say it's a fair assumption that Duncan would be part of the investment entity. With regards to what the investment business is going to be up to, I think it would be too premature right now to make any kind of specific comments on that. We already have been doing some trading. There's a bunch of investments that we keep declaring in the annual report. So those are all indicators as to what that business is doing. And of course, there are other opportunities and all that are also being explored. But I think the right time to discuss on this would be the post-the demerger.
Got you. Great. Just one last question. What would be the, assuming we don't do any more growth capex in this year, what would be the maintenance capex?
So as far as maintenance capex is concerned, we do have growth capex, improvement capex, and maintenance capex because we are doing one big project this year to further go on our sustainability journey as well as a cost saving journey. So including that and including the old carry forward capex that we had that has not yet hit the balance sheet, it could be in the range of 14 to 15 crores.
14 to 15, right?
Because this plain simple maintenance capex for company as a whole, I don't see it being more than 5 odd crores. 5 to 7 crores is the general range that I would say is maintenance capex for all the plants together. But every year we keep doing other projects which help us in our margins and all of those kinds of things.
Got it. And both our plants, the feedstock for both our plants is nat gas, right?
Sorry, I didn't get the question.
The feedstock for both our plants is natural gas, or do we use solar oil?
Anurag will better.
So you are saying feedstock for both the plants means sulfuric acid and insoluble sulfur, or Mundra?
No, I mean Mundra and Bharwar.
So feedstocks are the same.
Which is natural gas.
Gas.
Yes. So we are. So at one place we have piped natural gas that is in Bharwar, while in Mundra now we have started using propane, and we sometimes use LDO also, but majorly we have shifted to propane.
I would say that we have the ability to use all kinds of feedstock at both the plants. And then it's basically a decision from sustainability, commercial, and all of those things.
So would that be a potential driver, given that gas prices have come off? would that be a potential driver of margins this year as well?
So this is something which has happened last year itself. That is the mix. The potential driver of margins is coming from the projects we have taken to improve our efficiencies.
These things have gas prices further come down.
So the gas prices have further come down, yes, and it will help. And when we said that we are hopeful of sustaining the margins this year, that is a component that we have considered.
Excellent. Okay, thank you so much.
Thank you. The next question is from the line of Jignesh Shah from Shah Investments. Please go ahead.
Good afternoon, sir. My first question is, how is the current demand outflow in the domestic market and the exports market, especially in Europe?
So as far as the domestic market is concerned, we expect that the demand to grow in the domestic market in the range of about 8 to 10% for overall insoluble sulfur, which is based on the projected demand of the tire industry as well as the increase in the insoluble sulfur consumption. As far as Europe is concerned, the demand continues to be muted on account of high prices of fuel, on account of the geopolitical situation of the Ukraine-Russian war, and overall depressive sentiment on the economy. So the demand continues to be muted in Europe.
Understood, sir. And how do you see the demand-supply dynamics for insoluble sulfur in the next 2 to 3 years?
So if everything remains stable, we are still hopeful that the demand for insoluble sulfur should grow in the range of 3% plus minus globally per annum.
Understood. And also, do we see our market share increasing going ahead?
Well, that is our endeavor to increase the global market share, and we are working towards it.
All right, sir. I think that is from my side. Thank you so much.
Thank you. Ladies and gentlemen, if you wish to ask more questions, you may enter star followed by 1 on your phone. The next question is from the line of Aditi Sawant from ATM Advisors. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. My first question is that what are the steps we have taken, to improve our efficiency? And second one is, are we planning any capex for insoluble sulfur in the future?
So as far as the steps for improving the efficiency is concerned, we do take steps and wherever we find opportunities through our R&D and technical team. It's a continuous process. It will be difficult to point out one step, but this is a continuous process. As far as the expansion, the next step of expansion is concerned, we are looking for confirmation from the market for increased volumes. Once we are certain of the utilization of the volumes that we have currently, we will immediately go for expansion, for which everything is ready. Civil work is mostly done.
Okay, so have we identified any products for that?
So the expansion, currently what we are talking about is insoluble sulfur only. Because we have earlier expanded on a 2-phase expansion basis, where majority of the utilities and civil expenditure happens in the first phase in order to save overall cost. And the second phase will be at less than 50% cost of the first phase.
Okay.
So that's our first priority.
Okay, got it, sir. Thank you so much, and all the best for the upcoming quarters.
Thank you. The next question is from the line of Riya Soni from Soni Investments. Please go ahead.
Hi, sir. Thank you for the opportunity. I have 2 questions. Firstly, what are penetration levels in US and China currently, and where do we see it in next 2 years? Also, have you added new tire customers?
So in China, our penetration level is next to none. As far as America is concerned, we have started penetrating there, and by the end of the year, we are hopeful of adding a lot more quantities. That's our focus, one of the focus. And yes, we are adding, and in the process of adding more customer and customer plants. That is where we see our growth coming from.
Okay, secondly, could you comment on the volumes and utilization for the quarter and the full year?
Can you ask the question again, please?
Could you comment on the volumes and utilization for the quarter and the full year?
So we do not give those figures. As I commented earlier, we do not give the volume figures because of the competitive environment. But I have already commented that capacity utilization or the volume would be the right thing, not the capacity utilization, because we had an expansion last year. The volumes for the year were on the same level as they were for the last year. For the quarter, they were a bit lower than the last year, but for the year, they were the same as the last year.
Okay, thank you. That's all from my side.
Yeah.
Thank you. Participants, if you wish to ask any questions, please enter star followed by 1 on your phone. The next question is from the line of Harsh Shah from Top Hill Investments. Please go ahead.
Hello, sir.
Yes.
Sir, I have 2 questions for you. If you can give some commentary on how business is going on in Europe, since it's a 50% plus contributor to overall business.
It is not 50% contributor to our overall business. I think that figure is wrong. Though it was a very significant and continues to be a very significant part of our export market. I have already touched upon the subject of consumption in Europe, which continues to be subdued, affected by recession-like atmosphere there, the Russian-Ukraine war, and also higher prices of fuel, which have now started coming down, but still remain higher than usual.
Okay, sir. Also, one more question. For quarter 4, our EBITDA margins have been 17.6% around. So can you throw some light on the same?
Well, in Q4, in fact, our contributions were much better than the Q4 of last year. And that is why even when I say that we have sold less quantity, our profit has been better than Q4 last year. The EBITDA margins are a product of your profitability as well as of your top line. The reason that it was lower was because of higher selling price on account of higher costs. But our overall profitability was better on account of better margins, mainly from exports, because of lower freight costs.
Okay, sir. Thank you.
Thank you. As there are no further questions, I would now like to hand the conference over to management for closing comments.
I take this opportunity to thank everyone for joining on the call. I hope we have been able to address all your queries. For any further information, kindly reach out to us or Strategic Growth Advisors or IR advisor. Thank you once again.
Thank you. On behalf of Oriental Carbon and Chemicals Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.